Hey, Timothy Hilliard here. Welcome to video 2. So I ended the last video by promising you that we were going to take the answers you gave in the Monetize Your Core Motivation exercise and use them to give you a leverage tool that will allow you to start trading with the powerhouse traders in the market and start taking profits from traders who just don't have that leverage. But I got several questions about this topic and people really asking for some clarification about how doing something as simple as getting clarity on the core motivations could really be so powerful. Well, this question isn't just a question about trading. It's really one of the truly universal questions about success in any area of our lives. That if the answer is really so simple, then how could I have missed it for all of these years? So with that in mind, I want to make 100% sure that I give you solid value here. So I'm going to give you one of my top secrets about how money gets made in the business of trading. And the truth is that that's the only real secret that exists in the market. A knowledge of how money really gets made in the trading business. Most traders are running around desperately trying to buy a bag of magic beans. But if they were honest, they know that they're kidding themselves about actually improving their financial situation through trading. Now, I always tell people that if you're a sucker for magic beans, make sure you stop trading and get into a market where the beans they're selling you don't cost so much. But back to the secret I promised you. It's this, that despite all of the technological advancements in trading platforms, alerts, order triggers, backtesting software, advanced charting, etc., despite a flood of market gurus shouting their stock picks across the airwaves, network television, and cable news, and no matter what E-Trade wants to tell you about the number of new accounts they open every day, despite all that, the gap between those who make money in the market and those who lose money in the market is as wide as it has ever been. Why? The answer is probably not what you think. Chances are it's much simpler than what you think. But I need you to go get your answers from the exercise we went through in video 1 because you'll need to have them in front of you in order for you to fully answer that question. But before you do that, I need to ask you one more question. Now, don't laugh it off because I need you to take this question seriously. Okay, here it is. Would you go to work for a guy today who tried to screw you out of your last dime yesterday? And more importantly, would you go to work with that guy to screw your friends and neighbors out of their last dimes tomorrow? Now, of course, it's just a hypothetical question, and yes, it's a bit ridiculous, but I really want you to think about it. Because in part 2 of this video, I'm going to tell you a true story that sounds like something right out of The Godfather, but it's 100% for real. So, pause the video now and go get your answers from the exercise in video 1. Then come back, push play, and watch the rest of this video. So I asked you to think about whether or not you would get in bed with a mob to screw your friends and neighbors out of their money, and I promise you the rest of the story. Well, here it is. About 15 years ago, some friends of mine and I went to Vegas, and we're sitting in the sports book at Caesars, and we're watching Monday Night Football. This is the Cowboys, back when they were good, versus the Giants. And everyone's pumped up, the place is packed, and people are arguing about what's going to happen in the game and talking about the line. When you bet on sports, the line is sort of like a prediction of what's going to happen in the game. Which team's going to win and by how much. And you either bet on one side of the line or the other. The line that night was Cowboys by 8.5 points, or something close to that. Now, I've never put money on a game before, but my friends were all doing it, so I took a flyer and I put 50 bucks on the Giants. Now, I like watching people a lot more than I like watching sports. So, as I was at the window placing my bet, I noticed the pit boss, or whatever they call them, over in the sports book, looking over all of the tellers. Now, this guy looked like he was in the Russian mafia or something. And his eyes were scanning around like a hawk, searching for the next poor rodent he was going to swoop down and crush. Well, the game got into the third quarter. The Cowboys are playing terrible. And with a couple of minutes left, the Giants recovered a fumble and took it in for a touchdown that put them up by 17. Again, the line was Cowboys by 8.5. It looked like the Giants were going to keep rolling, so I ran over to the restroom next to the betting window. As I'm washing my hands, I noticed the pit boss was there washing his hands in the sink right next to me. The guy was so gruff looking, I hesitated for a minute, but I can't help talking to people, so I blurted out, "Nah, Cowboys by 8.5. Boy, it looks like you guys are going to be paying out a bunch tonight, right?" After a second, a funny smile kind of came across his face, and he said, "Boy, you don't know much about this, do you?" Well, I thought I did right up until he said that, and I was pretty sure that I knew as much as 90% of the other guys out there that had money on the game. So he says, "Here's how it works, kid. I don't care about the game. The game itself, man, don't mean nothing. It's all about how many people we can get to watch the game and bet on it. And then it's just about the line. All I got to do is get as many people to bet as possible. And the line keeps moving to make sure that half of them bet on one side and half of them bet on the other. Once that happens, I win, no matter what happens in the game." And then he said something to me that has stuck with me ever since. As he walked out the door, he turned around and he said, "I don't care about sports, kid. I ain't in the sports business. I'm in the people business." So what's all this got to do with trading? Well, the key lesson here is that when someone's behavior, the way they're acting, doesn't make sense to you, it's often because they're playing a different game than you thought they were. I guarantee you that when Las Vegas changes the line on a Lakers-Celtics game, 99% of the people think it's because they've changed their mind about who's going to win or how much. But that's not really what it is at all. They don't care about the game. When you understand that, you understand that the line is not a prediction. It's a barometer of people's emotion. The casino only cares about people's emotions about the game. And they're constantly monitoring them and moving that line back and forth so that half of the people bet on one side and half of the people bet on the other. Too many people betting on one side, and they move it until it evens out. And once the line is set up properly, the final score of the game could be off by 50 points, and they still put every single dime into their pocket. They're playing a different game than everyone thinks they're playing. Now, I call this unseen money. So back to these wolves of Wall Street. No, they're not the mob. They don't bury people in concrete and throw them into the Hudson. At least not that we know about. But there is a very important way in which they are very much like the mob. And that is that they're also in the business of making unseen money. So if you go and you watch a Hollywood gangster flick, what do you see? People shooting each other, revenge, drive-bys, hits, murders. But the real mafia guys, at least the big ones, they don't go to prison for murder. They go to prison for boring stuff like collusion and racketeering. Now, nobody wants to watch a movie about that stuff, but if it puts $500,000 a week into your bank account, well, then it becomes kind of interesting, right? They aren't in the business of whacking people. They're in the business of skimming. Yeah, sure, you can build a business here. Just pay me 5% of your gross in cash on the 10th of every month, and I'll make sure you get a building permit real fast, right? The mob doesn't want to whack anybody, and they won't just as long as you give them what they decide you owe them. So the feds tried for years to break the stranglehold that mobs had on cities like Chicago and New York. And in some spots, they're still trying. But they didn't start to have success until they realized that the mob was playing a different game than it looked like they were playing. They realized that the killings and all this craziness is just a distraction from their real business of running rackets. So here's how all of this connects to this astonishing cult secret that I'm going to spend the rest of this video talking about. I mentioned this bombshell report that I discovered that virtually nobody has read or understood. And I'll show you the details in a few minutes, but what the report really proves is that 3 out of every $4 in the market is being controlled by someone playing a totally different game than you are when they trade. And just like the sports fan who doesn't understand how the line works, or a construction company in New York City that thinks that nothing's going to happen if they skip out on paying Gino his 5% this month, if you don't know the game that's being played, you are going to get whacked. So that's what this video is all about. It's like a closed door meeting in the back of an Italian restaurant where the boss pulls you aside and he says, "Look, kid, if you want to survive in this town, you've got to know how it's played around here. I'm going to show you how it's played around here, how money really gets made, and exactly what you need to do if you want to stay alive and carve out your own little piece of real estate." So let's get to it. Let's talk about these wolves of Wall Street. Who are they? Well, let's look at a couple of reports that'll show you not only who they are, but give you real proof of just how much their power and influence has grown over the last couple of decades. I've shown these reports to several of my colleagues, and none of them have been aware of the reports or even aware with the trend that they showed. So this is an excerpt from the 2007 Institutional Investment Report put out by a New York think tank called the Conference Board. The excerpt reads like this. Data on institutional investor ownership in the largest 1,000 U.S. corporations show that institutions have substantially and consistently increased their holdings from 1987, with an average of 46.6% of total stock, to an average of 61.4% of total stock by 2000, and then rising to an unprecedented 76.4% of corporations by year-end 2007. Okay, did you catch that? Institutional ownership, and yes, institutional investors are the wolves of Wall Street, increased from 46.6% in 1987 to 76.4% in the market's recent peak. This is why I said earlier that 3 out of every $4 in the market are currently being traded by someone playing an entirely different game than you are. But are these institutional investors really wolves waiting to eat up your trades? Well, again, let's look at some data. Now, I know you hear a lot about secret reports and blah, 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 but this one is a true gem, okay? That came out of Poland, of all places. And again, let's read through an excerpt about how an increase in institutional ownership affects the game being played in trading markets, okay? So this is from a journal called Economic Systems, and the report is titled Institutional Investors and the Information Content of Earnings Announcements, the Case of Poland. So admittedly, this thing was pretty cryptic, but here's a straight shot out of the executive summary. We find evidence that higher pension funds holding in a company and in a market tends to reduce the magnitude of market reaction around public disclosures. We interpret these findings as an information advantage that funds have over individual investors, which may result from scale economies in gathering and processing public information or access to privileged information in the interim period. So as these pension funds begin to suck up market share, the normal reaction to publicly available information begins to get skewed, and the price action becomes further and further disassociated with the way individual investors evaluate and analyze price movement. But that's just Poland, right? Stuff like this doesn't happen here in the States, does it? I mean, all of the guys running these colossal hedge funds aren't trying to hurt me, are they? When the market tanked in the fall of '08, there are a lot of circumstances that led up to that. But very few people I talk to know what triggered the panic, what the match was that got dropped onto the powder keg. The moment of panic was caused by the collapse of 2 hedge funds at Bear Stearns. Yep, a couple of friendly neighborhood fund managers ran their unregulated and seemingly unchecked behemoths straight into the ground, and it caused a modern run on the bank at Bear Stearns, and the whole company went down with it. But it wasn't just the company, was it? As this giant tangled web that institutional managers had been weaving during the bull market began to unravel, the market went right down with it, as well as the hopes and dreams of every investor in America. So are you beginning to see the connection that I'm drawing with unseen money? Can you see that in order to make money in a market where 3 out of $4 are controlled by institutions, that you've got to adapt, that you've got to learn to see the game that they're playing? So how do you do that? The most fundamental way is to learn to manage your trading like a casino manages their betting. In a casino, the outcomes of any one hand of blackjack or any one person playing the slot machine are random. And honestly, to the casino, they're meaningless. But on a bigger level, the cumulative outcome of a whole series of bets produces a very predictable and very profitable return. How consistent? Well, consistent enough to satisfy even the most demanding venture capitalist firms who gladly fund dozens of new casinos every year. So to understand and play this game profitably, you have to have three things. First, you have to have a trading system that genuinely puts the odds into your favor over the long haul. So notice I didn't say you need one that's right 83% of the time, right? Just one that gets you north of 50% in the long run. Second, you have to be able to think about trading as a game of probabilities and not absolutes. Most traders have a huge need to be right on every trade, and that will be a permanent and crippling handicap unless they change it. So remember, the goal is not to be right, it's to be righter. Righter than you are wrong in either frequency or volume or both. But it's the third thing that's the most problematic. You have to be able to execute your trading system at a professional level day in and day out. In all the years I've spent working with professional traders, this truly is the hallmark of a successful trader. Their ability to execute consistently. But not surprisingly, it's also where most amateur traders fail. It's not a lack of resources or any secret setups. They just can't execute. You know, to make money trading, you've got to show up and perform when the lights are on and the theater is full and your butt is on the line. And there just aren't that many traders who have taken their trading seriously enough to learn how to do it. Well, I want to make sure I have enough time to show you how to do it. And so I'm going to upload another video in a couple of days that covers that from start to finish. But in order for you to understand that and take action on it, real action that'll get you where you want to be in your trading, we have to jump back and answer the question that you asked at the beginning of the video. How can doing something as simple as getting clarity on a gut level on what I want out of my trading really be so powerful? And if the answer is really that simple, then how could I have missed it for all of these years? To answer that, I need you to remember back to the first video when I told you that the most powerful force in existence is our need and ability to create a world around us that is consistent with who we believe we are. And that works both ways, right? It can make our lives great, and it can also destroy us, depending on our beliefs. I also told you that this force is so powerful that it acts like an inner mechanism, and that professional traders rely on that inner mechanism to literally compel them to trade properly and professionally, to execute consistently so that they can pull consistent profits out of the market. So here's how this really works. Pay close attention because this is the rawest and most powerful truth you're likely to ever hear about what allows professional traders to money grab your trading capital. Okay? We know that most traders are kidding themselves about improving their financial situation through trading, and that the number one reason for that is not a lack of resources, but in fact it is their inability to execute their trading strategy at a professional level. So it's obvious then that to have results that most traders will never see, you're going to have to do things that most traders will never do. Success in life is shaped by our decisions, not by our secrets. But let's be honest here. If you tried and failed several times in the past, you'll start coming at this with a sense of fear and dread, because somewhere in the back of your head you believe that no matter how pumped up you get about changing, that it will eventually fade and die out, and you'll be back to your old habits and your old results. So the real question, and again the only real secret of professional traders, is an understanding of how to create lasting change in how they execute their trading system. Thankfully, the method for making lasting changes is simple. There are only three pieces of the puzzle, and here they are. 1, understand that trying to motivate yourself to take action by pumping yourself up emotionally is never, ever, ever going to work. Instead, you simply need to raise your standards. When those things are tested, it's not an emotional decision that helps you stay true to the standard. It's not even a decision. The decision was made a long, long time ago, and you act in accordance with that decision. Not because you feel like doing it emotionally, but because you have an unquestioned belief that that is who you are. So how do you take something you know you should be doing but aren't and make it a standard? Well, that's the second piece of the puzzle, and it's where 100% clarity on your purpose comes into play. The only way to raise something to be an unquestioned standard is to have a vision of what your life will be like when that happens. And that vision has to be powerful. That vision has to be so powerful and so vivid that it becomes a new reality. You have to envision it. You have to envision it clearly enough and often enough that it becomes a new and unquestioned definition of who you are. So pull out the answers you wrote down in the exercise in video 1. Look them over and tell me one thing, okay? Are they powerful enough, real enough, important enough, worthy of your time and energy enough to become a new and unquestioned definition of who you are? Are they really that powerful? If not, you need to throw them out and start over. Why? Because what you want doesn't mean anything in life. We never get what we want, and deep down we know that. The results we get in life are based on our standards, on those things for which we will settle for nothing less. Finally, the third piece of the puzzle is to change the strategies you're using. But honestly, that's the simple part. Most traders spend their entire trading careers completely ignoring the first two steps and wonder why they never see any results. So, the next video is going to be a step-by-step guide about changing your strategies. And I'll be uploading that in the next few days. So make sure you look out for that. But before I end here, I want to make sure that I give you everything that I promised when you signed up. I told you that I would reveal to you the astonishing cult secret directly responsible for the success of 87% of history's most profitable traders. Okay, here it is. Their jealously guarded secret is that at a very specific moment in their trading career, they experienced a vicious intervention. They were stumbling through the markets just like you, struggling to find a system that works, desperately searching for secrets, stock picks, fancy new oscillators, anything that would give them the edge that they so badly needed. From time to time, they would make a small fortune, only to have it washed away in a landslide of bad trades with poor execution and bad decisions, piling on top of market turns and just bad luck. And then it happened. Out of either genuine concern or pure pity, someone grabbed them by the arm, pulled them into the back room, and flat out took it to them. They told them in no uncertain terms to stop living in a dream world, get their head on straight, and start acting like a professional. And most importantly, they showed them step by step, line by line, exactly how to do it. Well, there's a specific set of circumstances that have come together that's going to give me the opportunity over the next 7 to 10 days to do that for you. To give you your very own personal and private financial intervention. Now, I can't give you all the details just yet, but keep watching your email inbox and keep watching the videos because I promise I'm going to show you exactly how to do it. And best of all, I'm going to give it to you for free. Sound good? Okay. Make sure to keep watching and I will see you on the next video.